Okay, I'm going to take you through GoviEx Uranium. I think one thing you'll notice at this conference is a lot of enthusiasm towards the uranium sector. I was doing a meeting with a couple of funds earlier today. Almost every single company in there having a meeting was actually a uranium company and very little else. So uranium is clearly an interesting subject. I'm going to take you through GoviEx. It's a very different story. This is all about developing mines. It's about producing mines in this cycle. It's about turning them into cash flow. So I'll take you through what we've been doing and where we're going. Our booth is at 509, so if anyone's got any questions, I'm more than happy to talk through what we do in detail or not, to the level of whatever you want to go through. I'm pretty approachable guy, so it's straightforward. Okay, GoviEx, we were founded in 2007 by Govin Freeland, son of Robert Freeland. He was living in Beijing at the time, struggling to run, getting asthma every time he went out, realized you follow his dad's mantra, which is, if you're going to mine something that the Chinese want, because they're going to buy it. And therefore he decided to get into the uranium industry, went into Niger. We did a massive drilling program, defined a world-class deposit there. In 2016, we decided to do a transaction with Denison Mines, acquire their projects in Zambia and Mali. So we're sitting with a pipeline of projects. We're one of the largest resources out there at 260 million pounds of uranium in the ground. But the difference is we have not finished drilling. In Zambia, we've probably drilled only 20% of our property. In Niger, only 10%. In Mali, 5%. In Niger, we're at the top end of the deposit that Areva has been mining for the last 50 years. We got 10 kilometers between our deposits and the mining faces that they have. So a lot of upside. But the key to us is actually we're already permitted. Because we're in Africa, governments are pragmatic. In Niger, 60% of the exports of that country is uranium. The 2 uranium mines next door are due to close in the next 5 to 10 years. The government wants that our project and others to get up and start producing. So we got our mining permit in 6 months. Actually, according to the law, it should have taken us 4 months, so it was a bit late. But here in North America, you're probably talking 6 to 10 years for the same thing. So this is about re-rating a company from being a developer to being a producer, that ability to generate cash flow. We've got a management team that's been there, done this before, and I'll take you through that, and we've got some really strong shareholders from a corporate point of view. We are in Africa. Do not be worried by Africa. Africa has been one of the greatest producers for uranium around for a long time. Areva has been operating since 1971. They've never missed any of their production coming out. You've also got Namibia as well. One of the good things about Niger that I always point out to people is the mining code. Mining codes, jurisdictional risk is driven by your government and your code. The government in Niger has not changed for a very long time. We keep going through safe elections every time. The mining code includes your tax code. So a lot of things you see in a lot of African countries where they keep changing the taxes does not apply in Niger. It's locked in. Our mining permit is an act of law. We're driven by it. So all the infrastructure, people, power, they're all there for us in Niger. We have a large resource. It's already been drilled out to measured and indicated. We spent a lot of money. GoviEx has had spent on its various assets over time $250 million. You can buy that for less than $50 million market value at the moment. All of our projects have gone to PFS or moving towards better now. Just briefly on the market, key driver here, uranium generation of nuclear is back to pre-Fukushima. We're at construction rates on reactors, the greatest we've seen for the last 25 years. 6 new reactors were approved in China for construction 2 days ago. They're continuing to build. The WNHA and the United Nations Energy Council both did independent studies that show if you want to keep increase in temperature below 1.5 degrees, 1,000 gigawatts of nuclear power has to be built globally to achieve that. Just putting nuclear in context, California's 1 remaining reactor produces more power every year than the whole of their wind fleet. Just put you in context of where nuclear sits. On the supply side, The biggest single change in our industry occurred last year when Kazatomprom basically went from being value to being volume, took major production cuts and are fixing their position. I'm summarizing all this for you. But the key was effectively Cameco's decision to shut McArthur River. What you've actually got now is OPEC on the one side as Kazatomprom, but rather than a push-pull which OPEC currently plays, they have a market maker in Cameco sitting out there as well, who've made it very clear that their production stays off stream until they can get their contracts. Tim Getzel's made it very clear that he's looking for upper 40s to 50s as a price before he is willing to come back. What am I doing? Making sure that I'm pushing our costs down and are optimizing our project so I can get away at $45 in this year. That's my guide. The other driver out there is that 80% of all offtake is bought, of sales are offtake. What is happening is that inventories are already in decline, but as you can see from here, the uncovered position for these off-takers is falling away. Part of the problem is Section 232. It's confused the US utilities. They don't actually quite know what to do with themselves at the moment and are waiting for direction. That direction, unfortunately, has been somewhat slowed by the shutdown of the US government, but put a bit of a delay on it. But I think that's going to be a real catalyst going forward. So you've got Cameco already out there buying inventory. You've already seen the impact at the beginning of last year where they pushed the price up. Expect that to carry on into the first quarter, second quarter, and driving it through. See a real relift. Section 232 will give clarity. That will be another catalyst out there we're looking for. But how do we play into that? We're basically getting our projects ready. We're basically looking to get Madajuela into production first. It's my primary asset. Follow that with Matanga in Zambia. Madajuela is 21 years from start. Probably go to 50 years easy with the development there. It's $360 to build at the moment, $25 cash cost. Our all-in cost is lower than a US ISR project. The difference is they're finished, small volume, finished within 8 years. We're big volume for at least 21. Our mining permit allows us to keep mining until we run out of anything to dig. So what are we doing? We've signed up the feasibility guys. As I said already, the target here is all about cost reduction. We're looking at things like solar hybrid. That would reduce my power cost by about 25%. We're looking at the optimization that we can do on the process plant. We're looking at moving the process plant to the open pit, which saves me about $1.50 for every ton of ore that we mine. We're looking at the debt side still, working to move those expressions of interest up the Pathfinder to the MLAs, and that's going really well. We're working with the government in Niger to get the extension of the mining permit to cover the 6 million pounds that's in the Miriam deposit that's not in the PFS. So these are all the things that we can do to optimize the project, and we are doing. And for the shareholders that are currently in, I apologize for the lack of news, but it is coming. We are working on these things in the background, and you will see the fruition of that coming through soon, hopefully. We've stopped the offtake discussions for a while the uranium price just didn't go anywhere, but those were now starting to pick up again. They're the next stage for us as we take this forward. Our structuring on offtake is going to be very tight. We're looking to collar our projects. The reason we do that is very much because we have a second project. For me, the strategy of GoviEx has got to be about building a company for the long term. It's about getting Madajuela up and running, covering that structure, making that the cornerstone for this company. Because I have a second project. Many of my peers do not have a second project, so they have to put all their eggs into one basket. And GoviEx, we're diversified. And then we got Falea after this. Matanga is a really easy project, so if the market's looking good, we can start that very quickly. It's an open pit, heap leach operation, literally dig it up, stick it on the ground and put a sprinkler on it. It's that easy. Very low acid consuming. It's already permitted. I haven't got to wait 6 years to think about it. I can go to the government and say, I'm ready to go, here's my permits, I'm up to construction, let me go for it. We got a team that's been there. I've been in this industry for a really long time. Unfortunately, it seems to be getting very long in the tooth. I started in the uranium industry, but unlike many in my industry, I've actually been in the gold industry, I've been in the platinum industry, I've been in the ferromoly industry, I've been in diamonds. I haven't been in coal and some of the gemstones. I've worked in Africa. I've worked in Indonesia, I've worked in Russia, I've worked in South America, and I've worked in Canada. I've also been an equity analyst and done M&A, and I've owned my own consultancy company doing design work for other people. So I have a pretty rounded experience in the industry. My chief geologist actually did 10 years working with Mark Chalmers. He's worked in a multiple of other uranium companies. Rob Bowell was actually one of the technical guys for the Kazatomprom IPO. He's worked with a lot of the US, North American uranium plays as well. A lot of strength out there. From a board point of view, we've got Govin, we've got David Coates, the CEO of Denison Mines and UPC. Chris Wallace is a debt guy. Ben Wallace-Sal, a lot of you will know, but he gives us a lot of experience into Africa. From a market point of view, I think the key is we're very tradable. We trade a lot on the OTC and we trade a lot on the TSX-V. Trade about 1% of our value. We're currently sitting with about $3.5 million of cash. That includes the money that's coming back from Liquid. They've confirmed when they're paying, and it's in monthly tranches coming through, so there's limited risk on that. But the key really is this slide. We're looking at a big discount to our peers. Continue. The difference is, to myself and my peers, I'm one of the few, other than Boss Resources, who can actually get from the right-hand chart to the left-hand chart in quick time. That is the difference between how you are valued between being a developer and how you are valued at being a producer. Two outperformers in the last cycle were Energy Fuels and Paladin. In the last cycle, different cycle, uranium went to 130. We don't know we're going to see that again. The uranium sector gave you returns of 2,000%. Energy Fuels gave you a 4,000% return in the last cycle, and Paladin 10,000%. Why? Because those two built a mine. In Paladin's case, it was 2 mines in Africa. So there is, evidence in the past of what happens if you're changing a cycle and you get that re-rate that comes through from it. So also, don't be scared of Africa. The best returning projects were in Africa from an asset buyout. The cheapest, though, was $1.2 billion. The most expensive, $2.4 billion. Why did those get taken out? They were all taken out when they were securing their debt by the Chinese, the Russians, and the French. Why? Because those countries wanted security of that value. Who said was bought out? It produces uranium at $50 a pound. The Chinese do not care. What they've got is supply of uranium. They've also bought Rossing uranium for the same reason. So Africa's a great place to operate. This is a turnaround story. We like the uranium market. Thank you.